Investors and traders, welcome to the channel Market Chart Pattern. Today is 22nd of February 2025. Hope everyone is having a fantastic weekend. So I will be starting a new segment, and the new segment will be called Money Goes Where Money Grows. And there is a reason for this, that although the stock indices, the broader indices, they have been rising, but there is quite a lot of things which are actually happening underneath. And this is what I've been doing. I have been running some quantitative models on my database, and I'm actually uncovering stocks which have actually been outperforming the market, perhaps for example on a weekly basis. So with that in mind, in this video segment I will be presenting some stocks that I've been following. I have charted them as well, and on a weekly basis we will actually go and follow those and see how these stocks are actually performing in respect to, in relation to the broader indices such as S&P 500. As always, this video is for educational purposes only, and it is not a financial advice. So just to show you, last Friday, 21st of February 2025, the S&P 500 closed 104 points to the downside and was down by minus 1.71%. However, there are a group of stocks which actually closed on their high side and even made 52 weeks highs for the day, and they closed in the positive territory. So those stocks clearly outperformed the S&P 500. So I have put together a selection of these stocks, and I'm going to show you what those are, and we will actually go through them, their chart patterns, and we'll discuss further what the price action is doing and what the patterns are telling us and what are the key levels to watch. Okay, so I'm bringing here my little spreadsheet right here, and here what I've done is I've got a column which is called the asset description. In that I have the S&P 500 cash as the asset, and then I have the stocks that I will be talking about on all of them, but about five stocks. So we'll have Altria Group with the symbol MO. It's in the sector of tobacco. Jack Henry and Associates with the symbol JKHY, transaction and payment processing software. Starbucks, which most people will know in the North America and also in Europe as well. It's a coffee chain. I will not be going through its chart pattern, but it is here for a specific reason, and that is that the stock actually made a 52-week high, however closed on the weekly basis. It actually closed negative, but it's a stock which I would like to follow over time, so I've put it in my list. Alibaba, it's the e-commerce giant and a cloud computing giant from China. I have actually done a specific video just yesterday with a key target that we have been following for a long time for the Alibaba stock, and I will put a link in the description for the video. I highly encourage you to watch that video. You will find it very informative on the key level that we are watching, which is not too far away now, which the Baba is most likely to hit in the next few days, if not weeks, very soon. AMD, it's also a stock which I am watching. I will not be going through its chart pattern, but it's here as a stock which we will be following, not for this video, for another one. And Abbott Laboratories, ABT is the symbol. It's in the healthcare equipment. It also made a 52-week high. And then last but not least is Gilead Sciences with the symbol GILD. It's in the biotechnology sector, and this one also made a 52-week high the past week. Then I have got two columns. I've got the close. This is the close as of Friday, 14th of February, and then I have the close prices for 21st of February 2025. That was last Friday. And then what I've done is I've just calculated the points. So over the week, S&P 500 cash index lost about 101 points, or it was down minus 1.66%. And if we do the same calculations by having the closes for the respective closes for each Friday of the 14th and the Friday 21st, what we see is that Altria Group actually returned 3.3% to the investor for that week, whereas the broader index, the S&P 500, lost. And then Jack Henry and Associates, this one returned 2.8% for the investors for the week, again outperforming the S&P 500 broader index. Now Starbucks made a new it made a 52-week high, and it's just been going higher, and maybe it hit a point where, because of the broader indices and its participation in different ETFs that weighed on it, for some reason it actually closed in the negative, but still outperforming the S&P 500, because the S&P 500 is down minus 1.66%, and this was down only minus 0.71%, but still down for the week. I'm keeping it in the list, and I will be watching it, and we will chart this as well for a later video. And the clear winner is the Alibaba. It fantastic performance of 15 and a quarter percentage points, way outperforming the S&P 500 cash index, which actually lost 1.66%. And then AMD, we are watching this one. This performed actually poorly in comparison to the S&P 500 cash index. Abbott Laboratories is a very interesting stock in the healthcare equipment industry sector. It outperformed the S&P 500 broader cash index. And Gilead Sciences, the biotechnology, 5.64% returning to the investors. So when we look at this, we have a clear winner, which is the Alibaba. It's actually an ADR listed on the New York Stock Exchange. Then we have a tie between the Altria, which is in the tobacco sector, and the Abbott Laboratories, both returning about 3.3% to the investors. Jack Henry and Associates, which is in the transaction and payment processing software sector, returned 2.8%, and the Gilead Sciences, you can see that 5.64%. So now let's move over to the charts and see what sort of price action we see, what sort of patterns we see, and what is the price likely to do next. So I'm going to move over this to my other screen, and let's start by taking a look at the Altria Group. So here, this is the daily chart for Altria, and one of the key things about the stock is, if we just look at the retracement, it has had a really nice retracement of 78.6% from these lows of 18th of October 2024 to these highs reached 27th of November 2024. And then we also have this 38.2% retracement going all the way back to March of 2024. So we had a confluence of two ratios come together. The market also filled in this gap right here, and then we have seen a nice move to the upside. Now what is really interesting is that we had our first resistance level right at the 53 spot 50, which was about the 38.2% retracement of these highs to these lows around here. The market actually hesitated around here for a couple of weeks. You can see that here, and then there was a move to the downside, so bottom of the range, and then up again, a slight hesitation, about 38.2% retracement of these lows to these highs, and now it has clearly broken above this on two consecutive closing basis, so looking positive. Now the chances are that we are actually in a move which is going to give us higher prices most likely. So what could be our target? So on the daily chart, if we just do a Fibonacci expansion, we can come up with the two targets, so about $60 and $62.50 as the possible targets on shorter term basis for the Altria Group on the daily chart. Now of course all of this depends upon this $50 per share level is not broken to the downside, because this is where we have the key support level. If it does, then we are looking at an ABC downside, and that is not the preferred scenario. The preferred scenario is that this is a really important support, and it is expected to be held, but in the market anything is possible. So as long as it is held, I think it's got a fair shot to actually make new highs and go and target $60, and even beyond that to $62.53 on the daily chart, shorter term basis. Now this stock does pay dividends, so it pays about $1.02 in dividends. So I think that's where some of the rotational aspect is going to come into the market. Then investors will begin to favor those stocks which are fairly relatively in safer kind of industries, and also pay pretty good dividends as well. So just for the dividend yields is most likely going to be the theme. It's kind of reminding me of the scenario which took place in 2022. If the inflation scenario and inflation begins to rise again, not to the levels that we have seen previously, but remains more persistent, then we could see this sort of scenario can develop where we can see the growth stocks actually take a backseat. A rotation happens under the hood of these major indices, and we begin to see some of the other sectors actually begin to perform quite well. So this is an example of that. So we are just taking a quick look at this one, and then on the weekly chart. Um, yeah, so on the weekly chart also takes us to pretty much around the same level we were looking at, and we could be in this ABCD taking us to new highs. This is not going to be new all-time highs, but it's going to be new highs right here. It'll be a 52-week high, in fact. And what is likely 62 to 60 to about 62.50 is what we'll be looking at. And something just wanted to show you. You see these really colorful lines here. These are our price projections. These are these ABCD cycles that we're operating in the Altria Group stock, and I'm not going to go through the details of each one of them, but you can see that this is the red one is a one-to-one price projection, pretty much to the tick. It was that big corrective move. Within that, we also have this blue one, and then there is actually this black one as well. So a number of them coming close together right here, and then we have this three drives to a bottom pattern formed as well. So this is of course being done on historic data. It's always easy to do it that way, but the key point is that this 61.8% retracement, which is held around the $32 mark, is really important support. And as long as this is held, we could actually be in a bigger ABCD. We could see actually these highs being challenged at the least, if not taken out to the upside. So we'll take one thing at a time, and I will of course be updating on weekly basis how these stocks will perform. Now let's move on to our next stock, which is gonna be Jack Henry and Associates. So the symbol is JKHY. There is a fair amount of volatility in this stock ever since the earnings came out. It also pays a dividend of 58 cents per share, and our key level that I had been watching, it appeared to be actually moving in this channel formation right here, and the key level I was watching was this around the 169 mark. And the week of 10th of February, market actually went below that, but there was just no follow through. It jumped back right up, right from the 89 period moving average as well. So if it begins to get above this channel, back into the channel, then the chances will increase. It's likely to actually go and test the top of the channel. Now the really key level that I'm watching for is this $136 per share level, because this is the long-term 38.2% retracement, coming in all the way back to the lows it formed in March of 2009. So this is really key. If it goes away to the downside, then we are looking at A, B, C, D, and we could see maybe $100. But that's not the preferred scenario. The preferred scenario is that this is really important support level, and we have seen a pretty nice move off this. We have seen in excess of about $30-40 already. So as long as this is held, the chances are it is in a move where we can see higher prices for Jack Henry and Associates, and it is in a payment processing software services industry, which is relatively higher margin I would expect. Moving to the daily chart, what we see is here we had this red price projection right in going a little bit lower 62, but the market actually found support from the $164 share level, which was a 78.6% retracement of these lows right here. I would have really liked if the market would have held this level. It went a little bit lower though, but we still had this smaller projection here as well. So confluence of two things coming together with the ratio, the green pattern. A little below, we even had the um, red projection as well, but the market has shot up. Right now it's just dealing with resistance coming in from some of these moving averages, but if the price begins to consolidate right here, that would be a pretty good sign. So really key level to watch is around here, around 162 bucks per share level for us, and these lows of 157 to the downside. Getting below this will change a lot of scenarios, but right now this support has held. We have had nice days up, and the preferred scenario is the market is actually likely to improve its momentum when the moving averages when the price actually begins to close above the 20-day moving average. That's going to be a pretty positive from a momentum side. So the preferred scenario is for higher prices. The key levels is because it's shot back up to this. This is why I'm more positive for the upside for this stock. And last week it actually outperformed the broader index as well. So now let's take a look at the stock of Baba. I'm not going to spend too much time on Alibaba because I've done an entire video on this. I just want to point out that look, it's been a really fantastic move, and on the weekly chart we have been targeting $160 per share level, which doesn't appear to be too far now, as long as it carries on its momentum the way it's been doing that. It was in a really long consolidation and it broke out of it, a lot of energy. And it's a really a parabolic move, and the chances are a lot of people might be actually chasing this one, and maybe we are able to hit our target quite soon. Now let's take a look at ABT, which is the Abbott Laboratory. It's a really interesting stock. So I'm gonna go back a little bit, zoom out of it. Here we go. So one thing I want to straight away point out is that there's really nice trend line support. If you take the lows of November 2016 and you connect it with the lows that formed in March of 2020, and then the lows which came in October of 2023, we have a very nice trend line, and the stock seems to be actually respecting that. And then if we just draw this little line right here, so this top and this top, you can see that the market pulled back right into it. It was also nearby 61.8% retracement as well, and then it just rejected lower prices, and then we have had a really nice move to the upside. And then it's also moving, in my opinion, in this channel formation which I've drawn, with this nice boundary as well, and now it's touching the upper part of this. Stock is pretty strong on a weekly basis, we can see that, and the key support for us has been around this 88 level, which has been long-term support. This is the 38.2% retracement coming in from the bottom it formed back in the 2003, and what it had done was it actually formed a double bottom right here. So if we just take this low of 2003 and then we connect it to the highs it formed in many years later, in 2021, then we get a 38.2% retracement. We also had the 61.8% retracement nearby. We also had 50% retracement of this move right here. So 61.8% from this low to this, from this low to this high. So that's the 61.8%. 50% from this, 38.2 from back in 2003. So really strong support level in my opinion. And as long as this is held, I think this stock has a pretty good chance to go and tackle and make a new all-time highs as well. One of the key things about this stock is look, it goes into this parabolic fashion, or I shouldn't say parabolic, but very strong trend. When it picks up a pretty strong strength. But before that, there is a fair amount of consolidation, which is here something which what we saw in the Alibaba stock. So you can see that back here in 2010, January 2010, it just went sideways and it wasn't really able to break out of it till September of 2011. So a pretty long time, and it's been even longer time around here. In fact, it went lower, and here it was a double bottom formation. But when it picks up the momentum after a fair amount of consolidation, look at the amount of consolidation it did right here. The stock just went nowhere in 2016 till December, so almost 1 year, and then it picked up a really nice momentum. So what we might be seeing could be something what we saw back in 2016, where the stock actually went pretty much nowhere from October of 2022 till October of 2023, so almost 12 months, 1 year, and then it might be in this phase where we could see a really nice resumption to the trend to the upside. And now the key thing is, as long as this support level is held. If it is not, then we're looking at a very different scenario, which is not the preferred scenario. The preferred scenario is that we are likely to see higher prices, and then what we could target is on the shorter term, at least go and hit the highs, which were the all-time highs back in December of 2021, and then we could look at 157, and beyond that about 170 to 175. These are shorter term targets, and based on the price action we could see even higher prices as well. And then if we just move to the daily chart, so this is the daily chart. Let me actually try to zoom out of it. Here you can see the amount of the consolidation it went into. I've tried to put it in this box, and it just broke out of it in January of 2025. So if we just use this classical approach, we take the bottom of the range, top of the range, which is double that. I think that also gives us 143 to roughly 144, taking out these highs or at least challenging them. So this is what we are looking at in the Abbott Laboratories stock for the shorter term. But I think the momentum, when it picks up that momentum, I think we could see really nice moves to the upside for this, as long as our key support level is held. So really interesting. It's just not the tech stocks which have been leaders in the NASDAQ, but there are stocks in other sectors as well which are now performing really well. They were perhaps in really long consolidations, but now they seem to be breaking out of those, and that is the rotational aspect of this market that we are in at the moment, in my opinion. Now, the last one but not the least is the GILD. It is a really interesting stock. I am actually going to move over to the weekly chart for this one. Now, one of the key things is there is a possibility that it might actually look quite unbelievable at the moment, but but on the channel, you know that we really like to follow the ABCDs, which is one-to-one price projection. We could be looking at this big massive one, which could in fact take the stock to $165 per share level. Whether that will happen in how much time or at all, I do not know. But what we are looking at is that this stock went into a really long consolidation. So it put in a top back in 2015, and then it retraced. And when it retraced, it put in a bottom right at the 61.8% retracement of these lows right here. So a really, really key support level. And then it never really took that to the downside. So it tested this one time, two times, three times, and then what we have seen is a retracement right to this 61.8% level from this bottom to this high, and then now it's breaking out. And look at this, is a really classic Wyckoff spring kind of accumulation, which has been taking for going on for a long time. Something similar to what we have seen in Alibaba stock. So really starting in 2018, and where we are in 2025. So just do your counting, how many years has been, it's more than five. Now where we are right is this 78.6% retracement of these highs to these lows. This may provide some sort of resistance, or the market would go sideways to a little bit lower perhaps. But look on the weekly chart, the price is above the 20-week moving average, is above the 89 period moving average, is above the longer term 200-week moving average. So the momentum is really pretty strong. Now the market could go in consolidation in the week, and the moving averages such as the shorter term 20-week could catch up with the price. That possibility is there, but getting above this 78.6% retracement on a closing weekly basis, I think that's a very positive for the stock, and we could in fact see rather a quick move to the upside, because this is what we have seen previously. When it breaks out of these consolidations, then we see a move which sort of becomes a parabolic move, but it lasts for quite a while. So we might be in the early stages of that. There's a possibility of it. So let me actually show you this. Let's go back in time right here. Let me blow it up for you guys. Here we go. So this is of course when the stock actually split back in 2007. But this is the last kind of correction it had, which is also one-to-one projection right here. So you can see the stock went into fairly long consolidation, or correction, starting in August of 2008 and bottoming around August of 2010. So about 2 years, and then there is fair amount of further consolidation. If we just draw this as a rectangle, you can see that for a long time, and then when it broke out of it, oh my goodness, what a move. So could we be just in the throes of this? I think it's just breaking out of this consolidation. This is the key resistance where it is right now. Keep on watching this. I'll keep on updating you on weekly basis once it's able to get above these resistance levels, which look like minor resistance levels. We could have a pretty good move in this stock, as long as this $56 per share level is held, which is our point C. We might be in a CD leg to the upside. So this is what we are watching in these key stocks, which I will be now following as a new segment, which I'm calling Money Goes Where Money Grows, because I think there is a rotational aspect coming into the marketplace now, where some of these stocks which have been in a pretty long consolidation are kind of breaking out to the upside, and some of the stocks which have been leaders, they might take a back seat, especially with the growth stocks. If the inflation expectation, or the inflation remains more sticky than expected, we could see a pullback in those stocks, those fantastic growth stocks. Those are such as Meta, Apple, for example, but they might go into their consolidation, and these stocks which have been which are dividend paying stocks, which are also in a kind of defensive industries, like with a strong moat around them, they might begin to break out of their consolidation patterns, and we could see some really nice moves taking in these stocks in the marketplace. So this is what I've been watching, and I wanted to present it to you guys. Thank you very much for watching the video. If you found the video of educational value, give it a thumbs up. If you learned something from the video, you found it good, educational, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know the new videos are posted, and you will not miss anything. So speak to you guys soon. Thank you very much. Good luck, good trading, and speak to you guys soon.